Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka. What a bloodbath it has been in the market today, with the Nifty and sensex shaving off over 1.5% in today's session. If you look at the Nifty, the 22,000 mark, the crucial support zone of 22,000 has been broken. In fact, the intraday swing low on the Nifty is somewhere around 21,932. So we did manage to, break below that 21,950 mark as well in the last few minutes of trade. Broader end of the markets were also bleeding. The small cap index is down somewhere around 2.5%. The mid cap index almost 2% down. And if you look at the breadth of the market, extremely poor, very weak. Advanced decline ratio on the NSE was, in the ratio 1:5. So one stock advancing for every 5 stocks declining. In fact, the Nifty is now over 3.5% down from all-time highs. If you look at the India VIX index, another 6% jump. It's now above that 18 level. So in the last 10 sessions, I think we have seen quite a big bump up in the India VIX index. Aside of that, if you look at the sectoral performance, all of the sectors were bleeding in the red, barring the auto pack. So you had metals, FMCG, pharma and oil and gas. These were the top sectoral losers that lost in excess of 2% apiece. If you look at the individual movers, in terms of losers, L&T, that was the big loser, 6% down for that one after margin guidance disappointed in the fourth quarter. Coal India, ONGC, BPCL, Asian Paints after poor numbers, BPCL, as I mentioned, ITC, these are some of the key losers on the index. On the gaining end, you had just a handful of stocks that were gaining in trade today. And, on the Nifty, you had as many as three auto stocks featuring on the gainers list. So, Hero Moto, M&M, Tata Motors, Bajaj Auto, these are the, auto names that did well. SBI post good numbers. Infosys from the IT pack also managed to hold out. Broader markets also saw a deep sell-off. So the Nifty 500 gainers, few gainers, but let's talk about them as well. SKF India, Vijaya Diagnostics on the back of good earnings, Adani Power and Paytm, these were some of the gainers on the Nifty 500 index. On the losing end, you had Piramal Enterprises post numbers 8. Manappuram and Muthoot, both of them were down on the back of RBI advisory on cash loans. Sterlite Tech, Angel One, these were some of the other losers in trade. But of course, how should traders be navigating this leg of sell-off or this extreme sell-off in the market? To discuss that and talk about all the stocks that have been in focus in today's session, I'm joined by Nilesh Jain, who's the head AVP Derivative and Technical Research at Centrum Broking. Great to have you on the show, Nilesh. Would you say that, the breaking of the 22,000 crucial support zone now signals that the chart or that the Nifty is now entering the oversold zone, or do you think there is some more time to go till you call it, call it an oversold trend on the chart?
Good afternoon, Nandita. We have seen a sort of carnage today, and this is the 5th consecutive session where the Nifty index has been forming a lower top and lower top formation. Where after hitting highs near about 20,794 in the spot, we have constantly witnessed supply at the high levels. And today's fall, specifically, it has breached its crucial 50-day moving average that was placed at 22,300. Now, the only hope that we have is that 100-day moving average that is placed at 21,980. If today Nifty unable to sustain above the same, then definitely we are heading towards 21,800 to 21,600, or maybe further downtrend may extend. So as of now, the chart seems to be distorted, but we only have one hope of support, that is at 100-day moving average. Now today, we have witnessed some amount of unwinding on the derivative front. In the coming weekly expiry, if you look at the 20,000 put strike, we have witnessed unwinding of the position, and also 22,100 and 22,200. So these were the strikes on the put side where a lot of unwinding was seen, and the call writers have again got active at 22,100, 22,200, 22,300 strike. So constantly the resistance are shifting at the lower end, and the major cause of concern is definitely India VIX volatility index. This has been the 11th consecutive sessions now. The VIX has jumped close to 80% from the lows of 10 earlier on the day of 24th of April. So from those levels, a constant upmove, a gradual upmove is this not a good sign for the markets. Rising volatility is definitely track the index, and that is what we are witnessing currently. So the VIX needs to cool off below 16 levels for further bulls to regain the control. But as of now, it's a cause of concern. It is better to stay away and stay light on the long side.
All right. Of course, slipping below these crucial levels is concerning, and also, the fact that we've seen the market share, share loss of somewhere around 7.6 lakh crore worth of market cap loss, if I may say so, on the BSC. But today's top loser, L&T, on the back of guidance disappointment on the margin front, we've seen a 6% slump. Stock has been in a downtrend. If you also see the last 1 month chart, after today's weakness, would you say it's an avoid? How should one approach this particular stock?
Well, Nandita, in last couple of months, no doubt we have seen some consolidation, but now of late there has been some selling pressure. Specifically today, we have witnessed a big gap down opening. Now, the only I would say a major support for L&T is placed at 3250. And if you look at the major 200-day moving average support, that is also placed somewhere around 3220. So these are the two important support zones. Today's crack was led by huge volume, and there was an spurt in the OI addition as well. So a lot of short buildup can be seen in today's trading session. So certainly there will be a follow-up selling in this particular counter. As of now, it is better to stay away from trading point of view. But if somebody is looking from positional sort of a bet, it can be added in the portfolio in a staggered manner as a positional bet. But good level to enter could be below 3200, somewhere in the range of 3200 to 3150. That could be a good entry point. As of now, from trading point of view, I think there will be another leg on the lower side.
All right, that's the view on L&T. But let's talk about an SBI. In a weak market, the stock managed to hit a 52-week high. In fact, the stellar set of numbers, a big beat on the profit front. Let me just take you through the numbers. Profit growth of 24% on a YY basis. Expectations were of a drop of 20% in profit. So that's a big beat coming in on the profit front. Even NII has risen 3.1%. You have gross NPAs that have declined on a quarter-on-quarter basis. Provisions, have come in higher on a quarter-on-quarter basis, but they have halved on a YY basis. Aside of that, loan growth has also been good. 5% quarter-on-quarter and 16% double-digit loan growth on a YY basis. Stock is up, I think, 27 to 30% on a YTD basis, 27%. Higher highs, would you play for a 900 kind of target here?
Absolutely, Nandita. Extremely positive set of numbers can be seen from the SBI. And today it has hit a fresh record high as well. So looking at the recent momentum, the stock earlier gave a breakout from a triangle formation at 780. We have seen a follow-up move in this particular counter as well. So as a part of a disclaimer, we have in our coverage for upside target of 900. So that's our target that we are expecting to achieve in next 2 to 3 months. So yes, it can be a good bet during market volatility. If at all we see any dip towards 800 or maybe towards 750, that can be a good entry point from a fresh long point of view. But if somebody is already holding the long position, can continue to stay put, keeping a trailing stop loss below 780. The short-term target for SBI comes around 850, and little position target that comes around 900.
That's the view on SBI. Asian Paints, Nilesh, poor set of numbers once again. They're subdued amid subdued demand. We've seen the stock shave off somewhere around 20%, and there are competition concerns also weighing in on some of these paint companies. So within the paint basket, how's Asian Paint stacking up now?
Well, Nandita, both the stock within the paint sector looks weak. Berger Paint and Asian Paint, both the stocks have a similar structure, and constant supply, constant weakness can be seen in this particular counter. The stock has been in a downtrend from past 6 to 8 months now. In spite of the crude coming down, the stock did not witness any rebound. So that is certainly a pain point. And looking at the technical structure, I think the stock is heading towards 2600 or maybe towards 2500. So it is better to avoid taking any contraband at current level. And if at all we see any pullback towards 2800 or maybe 2850, that can be a good opportunity to create a short position. So the structure looks weak as long as it trades below 3000. And we expect further downtrend to continue in both Berger Paint and Asian Paint.
All right, weakness to continue here. Charts looking weak. But what about autos? They've managed to hold out in a market, on a day when we saw a carnage in the market, right? The likes of TVS Motor, Hero Motocorp, Bajaj Auto, two-wheeler pack has been, of course, very buoyant. We've seen Bajaj and TVS in particular see a very good run, right? But post earnings, would you prefer a Hero Moto or would you stick to Bajaj Auto?
Well, Nandita, so in fact, the Nifty Auto Index hit a fresh record high today, and it scaled to 20,994 levels. So as far as the Nifty Auto Index is concerned, the structure looks strong, and we expect further up move to continue towards 30,200 to 33,500. So within this space, the stock that we are betting on is Hero MotoCorp. Technically, it has given a good breakout today. Good price and volume activity can be seen. So post number, this kind of move where OI addition can be seen, so fresh long buildup is also happening. So yes, this is our buy for upside target of 4,900 to 5,100. So these are the two immediate targets for Hero MotoCorp. It can be added in a staggered manner, good portfolio stock. It is advisable to buy and decline towards 5,600 to 5,650. Keep a stop loss below 4,500. From trading point of view, the target comes around 4,900 and a positional target comes around 5,100. And apart from that, uh, within two-wheeler space, another stock is TVS Motor that is also looking positive. Here as well, we have witnessed a good price and volume breakout. Technical structure looks positive. Upside seems to be open for 2,150 to 2,200. Stop loss can be placed below 1,950.
All right, those are the levels to watch out for on some of the auto names, including TVS Motor. But gold loan firms came under pressure today. RBI advisory report suggests that RBI advisory says that no NBFC should disburse cash loans in over 20,000 rupees, right? But Muthoot has said that it doesn't see much of an impact, given the fact that most of the customers, 80% of the customers, have moved to non-cash channels. After that, we did see Muthoot come off day's lows. But Manappuram as well, both these counters in fact have seen a fair bit of weakness. Would you advise a buy on dips here?
Well, Nita, Muthoot Finance did see a recovery from the lows, and it has managed to close near about 1,600 mark after hitting lows somewhere around 1,509. But still the structure is looking slightly on a weaker side. We may see another leg on the lower side. As far as Manappuram Finance is concerned, it's a clear sell. If at all we see any pullback towards 170, 172, that might get sold into. The stock is approaching towards this 200-day moving average, so that would be a make or break level for this particular stock. So that is placed at 160. If it breaches 160 on the lower side, then the downside target comes around 150 to 145. Looking at the recent downtrend, I think it is not advisable to take any contra bet in this particular counter for the time being. Better stay away from within this space. And within NBFC, there are better options available. But as of now, these two stocks, it is better to stay away.
All right, better to stay away from these gold loan stocks. But what about OMCs then? HPCL reported numbers. The GRMs were on the weaker side, below expectations. Margins were also tad lower than what the street was anticipating. But, both these stocks, or in fact all three stocks, HP, VP, IOC, are very trigger happy, right? When we see crude prices easing, we see a good rally coming in, like, what happened yesterday. But today, again, 4 to 5% cut on the names like HPCL, BPCL. How should one trade into them?
Surely that if you look at the crude oil price, that is certainly is coming in favor of these particular counters. But we have witnessed some poor sets of number from IOC as well and HPCL also. I think it has somewhat missed the street estimate. Looking at the structure, I think there could be possibility of some consolidation that may extend further. We are not expecting any major crack, but yes, some consolidation. That is what happening in last 1.5 months. That is likely to extend further. But within this this space, I think BPCL could be a better option if somebody is looking to make a fresh entry. I think if at all it dips towards 580, that can be used as a buying opportunity. One can keep a stop loss below 560. This sector might see some sort of a rebound or reversal going forward. But yes, this consolidation is likely to continue. Within this space, we are liking BPCL for upside target of 620 to 640 in the near term.
All right, couple of stocks that managed to hit a 52-week high in a weak market. Jupiter Wagons, this stock, hit a fresh 52-week high today of 449 almost or thereabouts. Good numbers. Is there a trade here?
So Nandita, even if you look at this particular space, Titaga Wagon, Jupiter Wagon, in fact, both the stocks have fairly done well in last few months and few weeks now. So structure-wise, this particular counter looks strong. Today, we have witnessed a huge volume breakout. The stock has hit a fresh record high as well. So structure-wise, it looks like it is heading towards 460 to 480 in the near term and can be added at current level. The support is somewhere placed around 390, so that should be the stop loss. And if at all we see any dip towards 410, 400, that can be bought, and upside target comes around 460 to 480 in the near term, and positional target comes around 520.
Okay, another chart that I want to bring to your notice is Kirloskar Electric. This stock again hit a 52-week high. Ace investor Ajay Upadhyay has bought nearly 1% stake, reacting to that bit of news flow. But in the last 6 months, we've seen a 40% uptick here. Are the charts looking good?
So Nanda, I'm not able to track this particular counter as of now. I just need some time.
No worries, no worries. Let's talk about the private banking names then. Kotak, we've seen divergent moves post the RBI ban. The stock plummeted and how. But post numbers, it started recovering a bit, right? It has staged a good recovery after the numbers at least. So among the top 3 or 4 names like ICICI, Axis, Kotak, and IndusInd Bank, so to say, which one would you prefer?
So out of all the large cap names that you have just highlighted, I think Kotak still has a good potential, and it can be a good bet given the kind of recent correction that we have seen. The stock has gone into extremely oversold territory. The RSI has reached to the levels of 30, and historically we have seen whenever RSI for Kotak Bank reaches 30, we have seen a good decent momentum, and that is what we are likely to witness from here. And if you see in last 4 to 5 consecutive sessions, we have witnessed a lot of underperformance and negative price pattern in the bank Nifty, but this particular counter has outperformed. And looking at the recent reversal from the lower levels, we expect this pullback to continue towards 1700 to 1750 in the short run. And positional target for this particular counter comes around 1900 or maybe beyond that. So yes, Kotak would be a preferred bet within this space.
All right. Of course, has had a phenomenal run over the last 6 months. But in the recent bout of correction, would you advise a buy on dip?
I think there may be possibility since the markets are looking slightly weak. So Tata Power may slip towards 400 kind of levels. So probably at those levels, it can be looked at. The major undertone continues to remain on a positive side. But I feel since there could be possibility of a further dip towards 400, so one should wait for that particular price action. Post then it can be looked at. But as of now, it is better to stay away.
All right, better to stay away from Tata Power as of now. But given the texture of the market right now, Nilesh, if I asked you to recommend some stock picks for our viewers, which ones would you pick?
Right, Nandita. So we are liking auto space as a whole. As we mentioned, the autos have constantly are hitting all-time highs. So within this space, the stock that we are liking, preferred bet would be Tata Motors. The stock has come out from a beautiful triangle formation breakout. I think the stock is heading towards a new record high towards 1050 to 1070. Stop loss can be placed below 1000. So Tata Motors is one preferred bet within auto space that can be looked at. And apart from that, if you look at the PSU banking space, as we discussed about State Bank of India, the structure-wise, this particular counter still looks strong. And we believe that the stock is likely to move towards 840 to 850. So this this particular counter can also be added at current level and on decline, keeping stop loss below 800.
All right, those were the recommendations coming in from Nilesh. With that, Nilesh, we're running out of time. I would like to take this opportunity to thank you for taking out time and joining in this afternoon and sharing your thoughts with us. Let's hope tomorrow is a better day. Today we've seen an almost 350-point cut on the Nifty and an over 1000-point cut on the sensex. But let's hope, we've seen, in the past buying support come in at lower levels, right? So who knows, we could see some bit of buying emerge at these levels in tomorrow's session. But with that, thanks a lot for taking our time and joining in this afternoon, Nilesh. Appreciate your joining in.
Thank you.
Well, with that, we've come to the end of this edition of Closing Bell. Of course, ending the day on a gloomy note, but let's see what happens in tomorrow's session. It'll be crucial to watch whether or not we, manage to reclaim that crucial 22,000 mark, in tomorrow's session or not. But with that, completely timed out. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.